one of the most important investment opportunities of our lifetimes.
Yes, that is right. Cathie Wood has just updated her Tesla stock price target to $2,000 per share for 2027. This is up from about $1,500 per share for 2026. Today's Tesla stock price drop, Cathie Wood sees as a buying opportunity, which is exactly how I see it too. Let's hear from Cathie Wood herself. Why is her Tesla stock price target going up and what she thinks about these earnings?
So much to discuss with you, but I do want to start with Tesla. Your reaction to those results we did get yesterday, and specifically the fact that the operating margin dropped pretty dramatically to 11.4%, certainly in focus for trading today. Does this change your outlook or your thesis around Tesla?
Not at all. In fact, curiously, we want Tesla to scale its units because each one of them now represents the potential for a robotaxi and a robotaxi fleet. Now, Elon says it's possible that he could launch that fleet this year. We think it's more like last year. But the robotaxi fleet is really going to be, or the robotaxi service is going to be, from a margin point of view, more like a SaaS business. And so we think that it's very smart to maximize units because they have so much option value now.
ARK Invest just updated everything about Tesla stock on their website, and this is fascinating. Looking at this chart, you can come to a conclusion that ARK Invest believes there is a 100% chance that full self-driving is going to be solved before 2028 starts. Looking at last year's prediction, they thought it would be 2029. They actually got more bullish. I think that's partially because of ChatGPT being released, and now ChatGPT, if you don't know that you're texting with a computer, and I told you, hey, look, you're texting with a person here, you may not even realize that you are texting with a computer. These things are moving so fast. And to think that this is not going to translate into full self-driving as well is absolutely absurd.
Yeah. I mean, but we've been hearing about the robotaxi fleet for some time. There's a lot of regulatory barriers to all of that, and certainly technological barriers involved too. So how soon can we actually see that realized? And given the fact that you tweeted earlier today that you've got a new valuation assessment of Tesla coming out, how does that fit into your price target for the stock going forward?
The price target for our stock, and I think it's just hitting now, for 2027, because we do have a 5-year investment time horizon, is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and bull case.
Even some Tesla stock bulls will look at this and say, whoa, that bear case is a bit bullish already. I mean, 10 million deliveries in the bear case. That's quite a bit. I repeat, that's the bear case, not the base case, not the bull case, the bear case. Let's play around with the numbers here a little bit. Let's assume that Tesla hits their official target of 1.8 million deliveries this year and then grows 50% year over year. In 24, we got 2.7, 25, 4 million deliveries, 26, 6 million, and 27, 9 million. In the bear case, ARK Invest is predicting that Tesla will actually grow faster than the 50% year over year growth target that Tesla is officially guiding for. And primarily, I think that is because of full self-driving. And they have a lot of other interesting things here as well. For example, the average selling price actually makes sense to me. A lot of Wall Street guys think that Tesla will keep selling vehicles at $50,000 per vehicle on average. That is insane. But then at the same time, they only think that Tesla will deliver about less than 7 million vehicles in the year of 2030. That is also ridiculous. So under these circumstances, it sort of makes sense. But when you understand what Tesla is actually trying to accomplish and what It's the mission. If you know these things, you know Tesla is not trying to just sell expensive vehicles. Tesla wants to be a mass market brand. You look at the gross margins, for example, 51%. In the bear case, in 2022, Tesla had a gross margin of 26%. This is one big reason why I continue being so bullish on Tesla stock, because I believe that Tesla will solve full self-driving. When it happens, assuming it does, it doesn't matter what the margins were in 2023, Q2, Q3, Q4. It's completely irrelevant. What will matter then is how fast can you make more vehicles that you can put on the road and use these vehicles as robotaxis. That will be really the only thing that will matter.
Now, just Morgan, on the regulatory side, I actually think regulations are working in Tesla's favor. For, I think, roughly 3 decades, the number of auto fatalities in the United States fell to the low 30,000 range per year. And they've turned around in the last 5 years and moved up to 45,000 plus. And I think the pressure is on the National Highway and Transportation Safety Association to change something. So it is looking carefully at Tesla's data. And during Investor Day, Tesla released some data that we don't think many people paid enough attention to. The most important one is that with full self-driving, a Tesla vehicle gets into an accident every 3.2 million miles. And that compares to 1 every 500,000 miles for the average car on the road.
Cathie is talking about these numbers, and I drive a Model 3, and I test it with full self-driving. I have to say, from my personal experience, I know exactly where it is just not going to function as well as it should. And do I just let the car disengage by itself? I am not doing that, especially if I have people with me in the car. Too stressful, too much hassle. I just disengage, drive past that part, which, by the way, with every update, there are fewer and fewer and fewer parts in the city like that. Is getting better. Very substantially better. But there are still places there it just doesn't really work well. I don't even want to try to bother. If I went through the place 10 times and each time it failed in that place, I'm not going to try on the next time unless there's a new update. When there's a new update, I just try to go through all of the places and then I see, okay, yeah, these places, yeah, I'm still going to take over. So that data, I wouldn't really say it's clean data. It's something to pay attention to, and it's certainly impressive and great to see. If it was the opposite, and if this number was worse than average people driving in average vehicles, that would be very bad. But this is good and it's encouraging, and now everyone has FSD beta. So only people with perfect safety scores having access to FSD beta is no longer a reason for, oh yeah, that's why these crashes happen so rarely. You can't use that reason anymore. For now, maybe you still can, but just give it a few more months and you will have this data set overwhelmed with people with questionable safety score. So you won't be able to use that argument a few months from now really anymore. And I personally find that using FSD in a parking lot, I'm not going to attempt that for now. And that's where a good number of crashes happen as well. So I'm not sure if that's included in the data or not, but I'm definitely not using FSD in a parking lot. No. So I think the main reason why this data looks so good is because you simply just do not engage FSD when you are driving through some of the toughest spots in the city. Although I am driving through more and more of these spots with FSD on, especially with the latest update, which is a nice improvement, by the way.
I just want to clarify, did you say a $2,000 per share price target. Tesla right now is under 200 a share. So
Yes.
even if you were to 10x that, that would be an over $5 trillion market cap. Is that what you're saying?
That is what we're saying. We think that the robo-taxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030, and is one of the most important investment opportunities of our lifetimes.
Okay.
And I think one of the reasons for that is it is going to save lives. 80 to 90% of auto fatalities and auto accidents are caused by human error. And autonomous driving is going to take away the human error, we believe.
Although this will be replaced with computer error, but that will happen a lot less often. One thing that I absolutely love about driving on FSD is when I turn right on a red light here in Vancouver. If you're from Europe, yes, in US and Canada, you can actually turn right on a red light, which you cannot really do in most of European countries. And I have full self-driving on, and over here we also have a lot of bicycles. So not only do you have to look are the cars coming, but you also have to look behind you and see if any bicycles just popped out of nowhere, because they do pop out of nowhere, and you have to be very careful. With full self-driving, I find it double checks everything, and it just makes it everything a little bit easier, less stressful, and it makes that turn fast. It turns fast. That's one reason why I don't like using it in parking lots, actually, because it went way too fast the last time I used it. Like, oh, there are cars parked everywhere. What if one of them just starts driving, which sometimes happens? And yeah, that was a little bit scary. I was not expecting that. But when you are going through an intersection, if you turn quickly, I think that's okay. But in the parking lot, nuh-uh. And this is an important message to all Tesla stock investors. My name is Matt Posius. Like and subscribe if you haven't yet, and I'll see you in the next video. Thank you so much for watching.